Let's get into this financial segment. We delve into the latest market movements now, including the US dollar's decline against the lilangeni, fluctuations in gold as well as oil prices, as well as modest gains in global equity markets. Providing expert insights, I have Nedbank Treasury dealer Sandiswa Dlamini. He's going to shed light on these developments as well as the implications that they have for our economy. Let's start by looking at the US dollar, perhaps, which has depreciated by 1.32% against the lilangeni Nkosi. What are some of the contributions towards this particular development?
Good afternoon, Sfiso, and good afternoon to your viewers at home. So, as you have rightfully said, the US dollar have slightly depreciated as of this morning. But it's worth highlighting that it had really gained so much ground against the rand, going up to 19.20 in the previous days. So currently it is at 18.8375. The euro is at 19.4216, and the GBP is at 23.0018. So what happened is in the previous days there was economic data from the US which showed that the US economy is gaining strength. In December, they created around 250,000 jobs, which was a big positive compared to their expectations, which were around 160 jobs. This also helps in terms of the strength of the US dollar. And there are also still sentiments which are positive with President Donald Trump, who is taking office on Monday. So those sentiments are also very positively affecting the dollar and in fact positively impacting businesses in the US. So that's why we have seen so much gain in the dollar in the previous days.
And I want to assume that when the economy is looking that good in the US, the same is true for our local economy. When you talk about job creation in the US, because they always say when America sneezes, the whole world catches the cold. I suppose we want America not to sneeze.
Yeah, so as you have rightfully used that analogy, the world is definitely affected by the political landscape in the US.
Yeah.
Unfortunately, this time around, it's not so positive. So what we have seen is that Donald Trump have proposed tariffs as he comes into office. So these tariffs are bad news for everyone, even in Europe. As you see, the decline in the euro and GBP, that's mostly coming from the tariffs of Donald Trump. But this morning it was released that the tariffs he intends on implementing them slightly, which means the increases in the percentage of the tariff will not be all at once. They will be gradually put in place. So yeah, currently emerging economies like South Africa, Malaysia have been negatively impacted. As you can see, emerging currencies have been depreciating against the dollar, which is definitely coming from the tariffs that are going to be in place soon.
Donald Trump, man. Anyway, let's look at gold prices now. We are seeing a slight increase there. How do these commodity prices influence the broader financial landscape?
So, thank you for that question. So, in terms of gold is always viewed as a safe haven for the economy. So, in terms of if there are turbulences in the markets, most investors and big businesses will invest their money in gold. So, as you can see, currently the price of gold is up at 2,683. But this increase is also coming from the fact that central banks are currently increasing their stockpiles of gold. So they are the ones who are influencing the price of gold at the moment. And there is also a report that was published by Goldman Sachs which suggests that the prices of gold are expected to stay high and they might reach levels of 3,000 before mid-year 2026. So gold prices are expected to stay high. And in terms of oil, oil have slightly decreased, but just to note for context, the prices of crude oil had increased from the beginning of the year by around 10%. So this slight decline is just for...
It's very minor.
It's very minor compared to what had just happened. So this increase come from the fact that the markets are expecting that the demand for oil is going to be stable in the next few months, whereas the supply is expected to increase. But this is definitely not expected to last, because it's also been reported that the stockpiles of oil in the US have declined slightly, and we have seen the US impose or improve their sanctions on Russian oil. So what happens is that what was happening is the Russian oil was routed through India and China. So they would sell oil to India and China and then the rest of the world. So what the US have now done is that put sanctions on those trades. So this will put pressure on the price of oil and the supply of oil, which will mean prices might also tend up to increase in the future months.
Man, everyone is dreading that day. We want to get into equity markets now. The S&P 500, the FTSE 100, as well as the Johannesburg Stock Exchange All-Share Index are experiencing modest gains. What does this suggest about, first and foremost, investor sentiment, as well as how might it affect investment strategies in the region?
So thank you for that question. So in terms of our equities, S&P, FTSE, and JSE, I'll start with the JSE All Share. So it have increased to 82,123, and this is actually a bounce back. It had declined in the past. It reached lowest levels in the past 4 months, just recently, and the increase have been attributed to Renet investments, which have increased today by 8.4%, after they announced that they agreed to sell more than 43 million of their ordinary shares in British American Tobacco. It's a lot. Yeah. And the price is at 28 pounds per share. They will be selling to institutional investors, though. Right. And MTN Group is also doing well. It's up 7.1%. There's Kumba Iron Ore, which is also up 3.3%. But holistically, in terms of equities have been doing well, especially, I would say, this S&P, because of American businesses who have those positive sentiments towards Donald Trump taking office soon. And the FTSE, in terms of the FTSE is also responding to an inflation print that was published in the UK this morning. So what's happened is that the UK realized that they have low inflation. They expected higher inflation, but it was quite low at 2.5%. So this puts pressure in the Bank of England to start cutting rates next month. So what we have seen is that as of yesterday, the probability of the Bank of England cutting rates was at 60%. Currently, it's now at 75%, which means that it's now a little bit more likely for the UK to see interest rates decline. And to move to the S&P, which is in the US mostly affected by the positive sentiments of Donald Trump. But what's also happening today is that the US is going to be producing their CPI data. And so the market is currently trading cautiously around the S&P because we'll see reactions to it today. And we also have earnings print from the biggest banks, which is BlackRock, JP Morgan, Goldman Sachs, Wells Fargo, and Citigroup. They are also publishing their earnings today, which is going to give us a clearer picture in terms of the economy in the US, because currently we have this idea that it is very strong, but these numbers are going to validate or disprove that.
So much to cover on the ground, Sandiso, but unfortunately time is of the essence, and certainly we have run out of time. Let's go for a quick ad break. We'll come back and cap off the show.